Oil prices are trying to bounce back from a 7-day losing streak. Pressure in the oil patch this month reflects a couple key developments, ranging from weakening China economic data to fears over the COVID-19 Delta variant. Let's bring in energy sector pro Vandana Hari for more here. She's the founder and CEO of Vandana Insights. Vandana, always good to see you here. So is this more of a, first of all, what is driving this bounce we're seeing?
Good morning, Brian. So I think briefly, I would say it's the return of risk appetite in the broader financial markets. Oil had been under pressure with regard to the Delta wave and its potential impact on oil demand recovery, and especially when it started, the cases started spiking in the US, and then we had the outbreak start in China on the 20th of July, and various associated lockdowns and quarantine in China. But the real blow last week was signals that the Fed might start tapering towards the end of this year. And I think that was a real double whammy for oil. And, not surprisingly, as a result, with all the risk assets starting to catch a bit today, oil is basically going with the same flow.
Something caught my attention this morning, Vanda. Outside of the price action, Goldman Sachs, they're out reiterating their call for $80 a barrel oil. I would look to be in the medium term. Does that look realistic, given we are seeing weakness in China data, and we're also seeing weakness in U.S. data as well?
So I think the summer spurt in demand that was widely anticipated and did come through, especially with the full reopening of the U.S. economy through May and June. And we saw quite a bit of travel, mobility, leisure travel especially, and similarly in Europe as well. So Western Europe obviously hasn't opened to the same degree as the U.S., but nonetheless, there's been a very strong mobility pickup in Europe as well. And we saw this morning's data. Manufacturing activities is quite strong in Europe too. But I think the summer boom is over. I think the best of oil demand and oil prices for this year, in my view, are behind us. I wasn't in the $80 camp even before or when the summer spurt was starting, and I certainly don't see it happening this year.
Wow. This is Julie here, by the way. Thanks for being with us. So I want to talk a little bit more about China's role in terms of contributing to the oil price and to oil demand, because as you say, we've seen oil prices really follow along with concerns about the Delta variant. That has been part of the story in China. China reportedly has gotten the Delta variant wave under control. Is that part of demand going to come back? Is that part of the reason why we're seeing at least a stabilization in prices this morning?
So I would start with the caveat that China overall, Chinese economy has become a bit harder to read. So there's, of course, the Delta outbreaks that began, and what one would say. And of course, there is the thing about, do you take the official data on COVID cases in China seriously? But even setting that aside, a disproportionate response, as we know, it's one of the few big economies globally that is actually following a COVID zero policy, so absolutely zero tolerance. And they vowed to crush these outbreaks, and they seem to have managed to do that. So the highest number that we saw, and mind you, we're talking about a country with a population of 1.4 billion, right? The highest number was 143 cases daily. So that's, hardly anything. But as I mentioned, it was a disproportionate response. On Sunday, so this morning, they have reported 0 locally transmitted cases domestically. But the reason I said that it is getting harder to read, because yes, I think they will crush this. They have probably crushed it. And I do expect all the curves that were put in place over the past few weeks to be very quickly lifted, I would imagine as early as in September. But there's a whole lot of other problems that are starting to weigh on Chinese economy. We have seen that, well, it is growing. It will continue to grow. It was one of the first economies to emerge out of the COVID crisis, but it has been decelerating, even before the latest outbreak since pretty much the start of this year. And then if you look at the oil sector, we also see the government government being very concerned over commodity inflation. They have, in the past few weeks, released stockpiles of metals. They also released some crude from stockpiles. They've been cracking down on the independent refining sector, the so-called teapots, reining in how much crude import quotas they give them. So we generally see the teapots have been curbing their processing rates, and as a result, Chinese crude appetite has gone down quite a bit as well. First 7 months of this year, the country imported nearly 6% less crude than it did in the corresponding part of last year. So I think it's going to take some time for the oil markets to really wrap its arms around exactly how China is going to proceed. My base case will probably be 1 to 2% year-on-year growth in crude imports and oil demand. Basically, it's going back to the pre-COVID oil demand and economic growth in China.
All right, we'll leave it there. Vandana Insights founder and CEO, Vandana Hari. Always good to see you. Thanks for staying up. I know it's late over there for where you are.
Thank you. That's fine. Thank you.